If you've been following global headlines, you've probably heard one location mentioned again and again, the Strait of Hormuz. It may look like a narrow stretch of water on the map, but in reality, it is one of the most strategically important waterways on Earth. And whenever there are reports of disruption or possible closure, markets react instantly. So why does this narrow passage matter so much? The Strait of Hormuz sits between Iran and Oman, connecting the Persian Gulf to the open ocean. It serves as the main export route for oil and liquefied natural gas from major energy-producing countries like Saudi Arabia, the United Arab Emirates, Kuwait, Iraq, and Qatar. A significant percentage of the world's daily oil supply passes through this corridor. In simple terms, if energy flows through here, the global economy feels stable. If it stops, the world feels it almost immediately. When tensions rise in the region, concerns about the strait increase. Even the possibility of disruption can push oil prices higher within hours. Traders, investors, and governments monitor the area closely because energy prices affect everything: transportation, food costs, manufacturing, airline tickets, electricity bills, and inflation. If the strait were to face a prolonged closure, the immediate impact would likely be a sharp rise in global oil prices. Countries heavily dependent on imported energy, particularly in Asia and Europe, could experience supply strain. Insurance costs for shipping companies would increase. Alternative supply routes would be used, but those routes cannot fully replace the capacity of Hormuz. That's what makes it so critical. Beyond energy markets, a disruption would also have geopolitical consequences. Major global powers, including the United States, China, and European nations, have strong economic interests tied to stable energy flow. Naval presence in the region has historically aimed to ensure freedom of navigation and prevent escalation. Stability in this corridor is not just a regional issue, it is a global one. At the same time, it's important to understand that complete closure scenarios are complex. Multiple international stakeholders rely on the strait, including countries directly bordering it. Any long-term shutdown would have significant economic consequences for exporters as well. That's why many analysts believe that while tensions can cause temporary disruptions or warnings, a sustained and total closure would be extremely difficult to maintain. For everyday people around the world, the Strait of Hormuz might seem distant, but its impact can be felt in fuel prices at the pump, grocery bills, and stock market movements. It serves as a reminder that global trade routes are deeply interconnected, and that stability in one narrow waterway can influence the entire global economy. As developments continue, the world will keep watching this critical maritime passage. Because when it comes to energy security and economic stability, the Strait of Hormuz is far more than just a line on a map. It's a vital artery of the global system. If you found this explanation helpful, consider subscribing for more clear and balanced global updates.